Hi, I'm Chrissy,
And I'm Jess.
and this is
Financial Progress.
Welcome back to Financial Progress, where we break down complex financial topics into bite sized pieces for everyone.
Today, we're diving into something that affects all of us, our credit scores. Specifically, we'll be discussing what affects your credit scores and how you can improve them.
And that's right, Jess. And I just want to give a little disclaimer. This is just a real conversation between real friends. This is not financial advice. Please seek the help of a professional financial advisor, coach, or counselor before making any financial decisions. So let's get this episode kicked off. Whether you're applying for a loan, credit card, or even renting an apartment, your credit score plays a crucial role. So understanding what influences it can help you make better financial decisions.
All right. So let's kick things off by talking about what credit scoring systems are and how they work. And essentially, credit scores are generated by algorithms that analyze your credit report. Two of the most commonly used scoring systems are the FICO score and the Vantage score.
And these systems look at various factors in your credit report to predict how likely you are to repay your debts. And although the specific algorithms are closely guarded secrets, we do know the main factors that they consider. For the FICO score, which is used by 90% of top lenders, these factors are publicly known and weighted accordingly. For instance, the information we're about to share is publicly known on Experian.com, and that's where we're getting most of our percentages from in this entire episode. I also want to make a note that there's also other reporting agencies like TransUnion and Equifax as well. So they all have different ways of reporting things, and your score might be slightly different depending on which agency your credit score is pulled from.
Yep. And to add to that, if you ever need to print out your credit report, annualcreditreport.com, you're allowed to get it once a year completely free.
Yes, and if any reporting if anyone ever asks you for a credit card to get your credit report, then just leave that website. Do not put any information into there. Just go to annualcreditreport.com and you can pull this once a year for free.
Yes. So let's talk about breaking down these factors. First up is the payment history, which accounts for 35% of your FICO score. Chrissy, why is this so important?
So payment history shows whether you paid past credit accounts on times, and it's the most significant factor because it directly reflects your ability to manage and repay debt. So just one missed payment can have a significant impact on your score. More severe issues like accounts sent to collections, foreclosures, or bankruptcies can also have even longer lasting effects.
And then our next one is the amounts owed, which make up 30% of your score, which is the second huge factor. It looks at the total amount of debt you owe and your credit utilization rate. That is the percentage of your available credit that you're using.
Right. So to calculate your credit utilization rate, you divide your outstanding balance by your credit limit and multiply it by 100 to get a percentage. And ideally, you want to keep this rate below 30%. And those with the best scores honestly keep it under 10%. And this can be one of the quickest ways to improve your credit score by getting that credit utilization down.
Yes, yes. It's so important because I've noticed that when I started paying off my debt, a lot of people asked, like, how can I raise my credit score? How can I raise my credit score? And I tell them, like, I'm not an expert at, raising credit score, but my credit score went up just by paying off my debt, like once it went down. So that's really important. I recommend keeping it under 10% just to make sure that you want a high score. Now, let's talk about the length of credit history, which counts for 15% of your score. This one's pretty intuitive. The longer your history of managing your credit, the better. So that's like one thing, like I don't recommend, like when you do pay off your credit cards, don't close them. Just like cut them up and put them to the side if you don't want to use them again.
Yes, but also make sure that you do use them at least once a year because they will close the accounts on you if you don't, and that whole history will go away. That happened to me, and it was not fun because I was like I wanted that credit card, and by using it once a year, there's so many ways to remind yourself to do that. I heard of one person saying that they remember it as like to buy themselves a gift on their birthday every year on that credit card. So even if you have to do that, or if it's something where, you just pay for gas, but just try to remember to use it and pay it off every single year at least once so the account doesn't get closed, especially if you have just, a remarkable credit history on that card and the length of history is so long. Those two alone account for 65% of your credit score. So you just want to make sure that, you're making those payments on time and you have that length of history and keep up to date with both.
That's true. Now that you bring that up, because when I had so many credit cards, so it was okay. I was okay with them closing, but I didn't realize how fast they were going to close. So like I had paid it off, and then maybe like a year and a half, one closed, then 6 months later, another one closed. So it was like, it kind of was like every almost 2 years of getting paid off that they were closing, kind of. And it did affect my credit score a little. I'm not sure how many points specifically, but it did drop a little. So I allowed at that time, I guess maybe like if I had any store cards, I allowed them to close. But like any like major cards that I cared about, I made sure that I'm like, okay, let me just purchase one thing every year. But I check my credit report often, or at least like the credit karma. I check it often to remind myself which cards I have. So I'm like, oh, let me go into that card. Let me use it once, and then, you know. But yeah. I know some people who keep a spreadsheet of all their credit cards and like dates and stuff. So that's another option as well.
Yes. And if you also have like a annual fee on a credit card as well, and to make sure that the benefits you're getting from that card outweigh the fee that you're paying. So if, the fee is $95, you want to make sure that the benefits you're getting from that card are more than $95 and that you're not paying a fee to have a credit card open. So that's something important to weigh as well. So with the history, it looks at the age of your oldest account, the age of your newest account, and the average age of all your accounts. So even if you close an account, its age still factors into your credit history for up to 10 years.
Wow. 10 years.
I always heard like 7 years, you know what I mean? And to hear 10 years on this Experian website is kind of like eye-opening, right? Because I always heard like 10 years, but maybe good credit
7 years. Yeah.
is
like for repo, like a repo or like car stuff is 7 years. For bankruptcy is 7 years. So
yeah,
10 years. Okay.
that's
good
interesting.
to know. That is good to know. So there's the credit mix making up 10% of your score. This evaluates your ability to manage different types of credit, like your credit cards, your mortgage, car loans.
Yes, and having a diverse credit mix shows lenders that you can handle various types of debt responsibly. And it's a smaller piece of the puzzle, but still super important.
Yep. And then finally, the last factor is new credit, which also accounts for 10% of your score. This includes the number of recent credit inquiries and new accounts that you've opened.
So new credit can slightly lower your credit score because it indicates potential new debt. However, credit scoring models do account for rate shopping, like when you're looking for the best mortgage or car loan rates, by grouping similar inquiries together if they happen within a short time frame. For instance, if you're car shopping and multiple dealerships check your credit within a 2-week period, those inquiries will be treated as a single inquiry.
That's good to know. And sometimes confusing because I had someone come to me showing me like all the inquiries, but it looked like it was a lot in one day. But if they're treating it as a single inquiry, I guess that's not too bad. Okay. So that's a great overview of the factors influencing your credit score. Now let's tackle some frequently asked questions.
Okay. So, one common question is, how do I check my credit score? You can check your credit score through various online services, some of which offer free monitoring, like Experian.
And if you have some major credit cards, I have like a few of them that shows my credit score on there as well.
Yes. I also have a credit card that shows my credit score, and that's where I usually get it.
And it
Yeah.
tells you where the score is coming from, like Vantage or FICO?
Yes, mine does. I don't know specifically where it's pulling from currently, but
Now I'm curious. So I'm gonna check that right now. Another question is, can service accounts like utilities impact my credit score? Generally, these accounts don't affect your credit score unless you miss payments and the account is sent to collections.
yes. And I know there were some things going on where I think the government is trying to get that into your credit score at some point. I'm not sure how that's going to work out, but yeah, I don't know. I haven't kept up with all the rules on that. So, do you know anything about that?
No, I hope it doesn't happen though. That's too much.
Well, I think it would be helpful for some people if like they don't carry any debt, but they have to pay their utilities. That would help them raise their score or get a credit score, because sometimes it's difficult to even get a credit score when you're first starting out, or
Yeah.
when you don't have any credit cards, or you don't want credit cards and you're trying to build your credit score. So I could see it also helping, but I can see it also hurting people in the sense where if they're
Pay for
struggling
it.
to pay for their utilities, that might be a problem.
That's where
Or
my first thought went to, was just like, if
yeah,
somebody's struggling, their credit score is gonna be shot.
right.
Or like if you miss a payment, you know how it is when you're
Yeah, so
late.
I have like mixed feelings on that. I do have mixed feelings on it because of there's so many different financial situations, and you just don't know what someone's dealing with, and don't want it to impact their score if they're just truly struggling financially to make ends meet, and that would hurt them in the long run. So I do have mixed feelings about it. I haven't researched it enough to give any knowledge on it whatsoever. So, but I did hear about that.
It's funny that you bring that up though, because my bad. I remember being at FinCon. I don't know if it was last year or the year prior. And we ran into a company that put kind of utilities and even rents on a place where it can calculate your credit score so they can help build. I don't know if you remember that, but I thought it was
I
very interesting.
do, yes. I don't remember the name of the company either, but
Yeah.
was it kind of like, yeah, I don't remember
But I
what
thought
it
it was
was.
interesting because I didn't think it was to help people build their credit score because it was so low and they didn't have like other means. So they took their rent and the utilities and was able to put it on, I guess, on their method, and it helped them increase credit score. I just thought it was pretty cool.
Yeah, so that's something we could look into for like a future episode. Not sure if anyone's interested in that, but if you are in that boat where you're like, I don't have credit cards, I don't want credit cards, but I do want to build my credit, maybe that's something that you can look into and try to figure out how you can use paying your utilities on time to build your credit score. So what about actions that can hurt your credit scores? So late payments, high credit utilization, and applying for too many credit cards in a short period can all have negative impacts.
So, how can you improve your credit score? Consistently making on time payments, reducing your credit card balances, and avoiding unnecessary credit inquiries are key steps.
And if you don't have a credit score at all, you can start by opening a secured credit card, which is what some people do recommend, or you can become an authorized user on someone else's account to build your credit history. But I do recommend, if you do that, to make sure it's someone you know pays their stuff on time, because that can impact your credit in a negative way. If you become an authorized user on someone else's account and then they don't pay it, it could negatively impact your credit when you're trying to build it up. So definitely, I would say if it's someone you fully trust, like your spouse, and you know that you have some control in paying that, then that would be a way to help build your credit. Secured credit card, I would recommend, if you do have to start that way, do not put too much on that card. Well, I guess for the secured credit card, you actually have to have money in there to use it. But the money that you have in there, don't use the whole thing. I would say make sure you keep that available credit in there.
I do want to add, if a lot of people recommend, if you're a parent and you have a really good credit history, you are able to add your teens on there so that they can also build their credit early instead of struggling to build their credit.
Yes. I don't know if anyone has ever watched Catch Me If You Can, but the guy in there, Frank Abagnale, he did a seminar at one of my jobs like a couple years ago, and he came and said that he did that for his kids when they were in college, and by the time they got out of college they all had credit scores in the 700s. So if you do have good credit, helping your kids build credit is easier. That's definitely a way to go, to add them as authorized users, and you have control over paying it. But I would, like I said, only do this if you have good credit and you're able to make those payments on time, because you don't want to hurt your kids' credit as well.
100%. So the bottom line is understanding these factors can help you make informed decisions and improve your credit score over time. Good credit habits like paying bills on time and keeping your credit utilization low are very essential.
Yeah, so that's all we have for today's episode. Thanks for joining us on Financial Progress. And if you have any questions or topics you want us to cover, feel free to reach out to us on Instagram.
And don't forget to subscribe to our podcast. We're on most podcast platforms, and to subscribe on YouTube for more insights on managing your finances. Until next time,
Bye.
bye.